Imagine going to the grocery store today. You reach the checkout line, but instead of tapping your phone or swiping a card, you heave a 50-pound, dirt-covered sack of wheat onto the counter to pay. For thousands of years, every single transaction required this exact kind of physical exchange. If you wanted a new pair of shoes, you had to haul your own surplus fish, grain, or pottery across town and hand it over to the cobbler. The sheer physical weight of these goods created a massive economic bottleneck. Value was locked inside the physical mass and utility of an object, making even the simplest daily commerce exhausting. Economists call this original method of commerce the barter system, trading one good directly for another. But barter comes with a flaw known as the double coincidence of wants. Look at this diagram. If you hold wheat and want milk, but the person with the milk actually wants shoes, the transaction stops cold. Because trade required perfectly matching desires at the exact same moment, early commerce was incredibly slow. It forced local economies to remain isolated, trapped within strict geographical limits. As populations grew, these limitations became impossible to manage. When commerce is capped by what your immediate neighbors happen to need that morning, a village cannot sustain the specialized labor required to become a city. To grow, humans had to find a way to make value portable. Early communities tried solving this with natural proxies. Items like these arranged white cowrie shells, salt, or animal skins. These were objects that everyone agreed held a standard unit of value. A major technical shift arrived in 7th century BCE Lydia. Notice the stamped animal figures on this gold and silver electrum coin. Those stamps verified the coin's weight and purity to any merchant who held it. This meant a person could convert an entire season of hard physical labor into a few small metal discs, carrying their total net worth in a pouch on their belt. But as regional trade expanded, merchants found themselves traveling long, dangerous routes carrying heavy chests of gold, making them prime targets for robbery. Civilizations in Mesopotamia and Egypt solved this by utilizing their most secure structures. Look at the imposing, fortified walls of this ancient ziggurat. Heavily guarded temples and palaces like this became centralized safe houses for wealth. A merchant would deposit their physical metal into the temple's vault, and the guardians would provide a written receipt recording their exact balance. By creating secure, centralized repositories that tracked wealth on written ledgers, these early societies created the structural foundation of the world's first banking system. Even with safe storage, moving wealth across continental trade networks was difficult if merchants still had to withdraw physical gold for every large transaction. Merchants eventually realized they didn't actually need to carry the gold to make a purchase. They just needed the paper that proved it existed. They began trading the paper receipts directly. This ancient Chinese banknote shows when governments formalized this practice. Look closely at the red official stamps pressed into the paper. Those stamps served as the state's guarantee, assuring the holder that real value was waiting in a government vault. Human value had moved from heavy physical metal into the weightless expectation of value written on a piece of paper. Over time, these storage vaults became the engines of global economies. Banks used the stored wealth to issue loans and fund new businesses, as seen in the extreme physical security of this massive vault door. The 20th century accelerated this transition. Look at this early cash station ATM. Value from paper notes was being condensed into a single plastic card. Today, digital networks like UPI have removed the physical object from the equation entirely. The value that once required hauling 50 pounds of grain now exists as pure digital data, moving instantaneously across the globe. Today, we operate on a shared agreement that digital numbers represent actual value. Money has become a form of social record-keeping rather than a physical thing. Seeing that green payment successful checkmark on your phone means using an ancient system. Currency and banking are the invisible infrastructures of human trust that allowed us to stop trading heavy sacks of dirt and build a global civilization.